Yeah, hi, this is Dan Schluff with Classic Mortgage. I'm going to talk to you today about pre-approvals and pre-qualifications because people use those terms interchangeably, but they're really very different. If you want to get an idea of what a borrower can qualify for, then the pre-qualification is the way to go. What that is a conversation with a lender about the borrower's income, their assets, their employment, and anything else relevant to getting a mortgage. But we don't verify any of that information. The only thing we do is order a credit report, take a look at their credit score, and see what kind of credit they have. So it's very good to give you an idea of how much you can borrow, how much of a house you can look for, and whether or not you are most likely going to get approved for a loan. But it's not anything more than that. So it's a good first step, and it's not that difficult to do. A pre-approval is actually a real approval letter. It's a commitment letter subject to a property and the contract and the appraisal. So it actually is the same thing as getting a loan approved. It's very good to have a pre-approval if you're in a competitive bid situation or if you're trying to get a house because the seller will know that you're approved for your loan. The only thing you'll have to provide is the contract and the appraisal, and then you're off to the races, you're good to go. A pre-approval, we're verifying your tax returns, we're verifying your W-2s, your pay stubs, your bank account statements, basically everything that we would need to approve a loan is getting approved and looked at ahead of time. So that's what a pre-approval is. So that has its place, but so does a pre-qualification. Oftentimes a pre-qualification is enough. But don't be fooled by a letter just because it says pre-approval. It most likely is a pre-qualification just substituting as a pre-approval. So that's what I have to say today. This is Dan Schluffman, Classic Mortgage.